This video is sponsored by the trading brokerage Moomoo. Use my link down below, deposit $100 with Moomoo, and we each get 5 stocks, and each of those stocks, get this guys, is valued up to $3,500. So get your free money from Moomoo, link down below, and let's get right into the video. Holy crap, guys, what a freaking day we saw today in the stock market. It was unbelievable. We started off the day green, we had a relief rally, and just like we talked about in my video earlier, not trying to toot my own horn, but we did kind of predict this. We talked about how today's rally in the morning might be a bull trap, and then lo and behold, we had a complete reversal. The markets collapsed, and that's what we have to break down in this video. So if you all find value, hit the like button, subscribe, and feel free to join the Patreon. If you want to be part of the action every single day, you get all my buys, sells, call outs, and a bunch of other awesome stuff. Morning videos for all of you guys that join the GOAT tier, the top tier on Patreon. That's linked down below. And with that being said, let's get into it, guys. So look, SPY ended up completely trapping the bulls, and same with Triple Q. I mean, all of these indexes had that nice push this morning, and this is when I made the video, I believe at about 11-12 on the East Coast here, and then all of a sudden, boom, you guys can see it on the intraday chart. After that rally up until about 11-12 on the East Coast, this thing went from 458, and then at 1 p.m., 2 p.m., it started collapsing. It went from 458 all the way now after hours. It's sitting at 443. So intraday, from that midpoint, or the peak rather, in the middle of the day, 458 down to 443, guys, where we hit after hours. That is a drop of over 3.3%. That is unbelievable. So we're seeing a lot of volatility. I mean, look, the VIX went up over 7% on the day after being down. I think it was down. I mean, look at this VIX. It was down earlier in the day. It was at 21, and now we're almost at 26 after hours. The VIX is on fire. The metals are holding up pretty decently, but overall the markets are just collapsing. Look at Triple Q, guys. Let me pop this up. Triple Q started off the day pre-market at about 370 roughly. We had a nice push to about 374. That was at about 11 a.m. on the East Coast. And then all of a sudden, it started collapsing just like SPY, and in the after hours, it hit $357. So we saw an intraday move. Get ready for this. Are you ready? Is your stomach ready for this? We saw an intraday move when it comes to Triple Q of 4.5%. Let me say that again, 4.5% from top to bottom. This thing completely collapsed today. And overall, look, where could it go? I mean, I wish I friggin' knew, guys. I wish I knew. But at this point, we're probably due for another relief rally when it comes to Triple Q, especially. This thing collapsed under 365, went all the way down to about 358, which is a big support considering that was the low point from the middle of October. So honestly, guys, I wouldn't be surprised if we saw a bit of a relief rally here, maybe back to 365, but overall the bears are 100% in charge. And just to put this into perspective, Triple Q now is down 12.3%. So it's in correction territory from the all-time highs here. And SPY, which you're going to find this interesting, SPY is only down about 7%. I looked this up before making this video. From all-time highs to where it is now, SPY's down 7%. We have the Russell. We might as well do this on all of them. The Russell's down. This is probably down like 15%. It's got to be. Russell, let's see here. Yeah, oh my goodness. The Russell's almost in a bear market, guys. This is down 17% from all-time highs, and the Dow Jones is holding up the best, I'm assuming here, right? Yeah, Dow Jones is only down 6%. So this is what we're seeing. Small caps, mid caps are getting destroyed. Big tech is starting to crumble. Tech in general is not looking good. And a lot of the value plays, the value names, which are in the Dow 30, the Dow Jones, those are holding up. That's why the Dow is only down 6%, while we have the Russell down close to 20%. So what do you all think? Drop me a comment down below if you are finding value in this video. Make sure to hit the like button, subscribe, check out my Patreon, and get your 5 stocks from Moomoo. Those are valued up to $3,500. Get that good old free money that's linked right down below. And now let's talk about some stocks. So we all know 2 stocks today that went down a lot. One went down during the day. The other one went down after market hours, and that one is Netflix. Let's pop it up, guys, and talk a little bit about what's going on now with Netflix. Netflix, first and foremost, closed at $508 per share today, and during the day it went down 1.5%, held up pretty nicely, right? And then fast forward a little bit after that closing bell, it is trading from 508 where it closed. Now it's sitting at 406. This stock is down over $100 a share after market hours. So yeah, they didn't do well with earnings, guys. You probably guessed that. So you can see here Netflix did Q1 sales of $7.9 billion versus $8.08 billion estimated. So they missed revenue right off the bat, and they missed EPS by a long shot. They did $2.86, $2.86 EPS versus $3.45 estimated. So double miss for Netflix. We're seeing Q4 operating margin of around 8.2%, and their goal for 2022, they're targeting, wow, it's pretty impressive. I mean, that's a lot higher than where it is now. They're targeting operating margin of around 20% for 2022. So I'm trying to figure out here wow, that's the thing that's crashing the stock. It's got to be global streaming paid net additions at 2.5 million versus the almost 6 million estimated. That's for Q1 guidance. That's not good whatsoever. So it seems like this thing is crashing on obviously the double miss, but also weak guidance. I mean, we're getting weak guidance. That's just the truth. Q1 guidance, yeah, you see it here. Q1 guidance trails the estimate. So at this point, Netflix is down about 42%, which is nuts. This is well in a bear market now, from $700 down to about $400. So let's see this chart. I think I covered this recently. I forget where I did. I make a lot of content, guys. I post a lot on different platforms, but I was looking at Netflix around 400 as a potential dip buy, which, I mean, now after hours, it's at 400. It's right by the 180 SMA. It's actually under the 180 SMA on this this is the 3-year chart, actually. So that's a bit concerning, guys. I'm not going to lie. I'm not going to jump right into Netflix just yet, but I am going to give it a couple of days to figure itself out, let the dust settle, and then maybe we can catch, just maybe we can catch some sort of short-term relief rally type of play, because, you know, I'm pretty confident that Netflix will see, it's down a lot, it will see a lot of volatility, and it most likely will get a nice snapback, and we might be able to trade that. The next stock that got destroyed today, which I've been saying for months on my YouTube channel here, this stock's a garbage stock. It is Peloton, ticker symbol PTON, and I'm not sure why. I don't want to put you guys down. That's not what I'm doing here on my channel, but I don't get why people are still holding on to Peloton stock. I don't know. Maybe people are too scared to cut a loser. Maybe people are just grasping onto hope. Maybe it's going to come back. Or others are probably thinking, hey, maybe Peloton's going to be bought out and it runs up 50%, which could happen. I mean, don't get me wrong. But at this point, if you're still holding this, you're down a lot. I mean, I would just cut my losses and move on. Use it as a tax write-off. Put that money somewhere else. You know, put it in a better investment. So we got news today that Peloton is temporarily halting production of its connected fitness products as consumer demand wanes and the company looks to control costs, according to CNBC. Peloton plans to pause bike production for 2 months from February to March, the documents show, and it already halted production of its more expensive Bike Plus back in December and will do so until June. It won't manufacture its treadmill machine for 6 weeks beginning next month. So I've been saying this, guys, even during the pandemic when Peloton was ripping, you know, during the pits of the pandemic when Peloton, the stock was ripping, I was telling you guys, look, this is a short-term thing. People are going to go back to gyms when gyms open up, and that's why we're seeing the demand weaken. I mean, this is very clear, and I'm not the biggest, most great-looking guy in the world, far from it, but I understand gym culture. People want to get into that gym. They're not going to want to sit home. Sure, some people are going to want to sit home and do their Peloton. Whatever. Go ahead. Have fun. But people are going to real gyms these days, guys. They're going back to gyms, and it's the proof's in the pudding. The numbers are down, stock's down. They're cutting demand, or not cutting demand, they're cutting production, temporarily halting production. So this is probably going to keep going lower. This might be a penny stock one day, maybe under $5 a share. I mean, maybe not. Maybe I'm being a bit too harsh, but I could see the stock being a $10 stock. $15 stock, no doubt in my mind. So, yeah, I wouldn't buy this. I wouldn't touch it. Maybe I'd trade it, but then again, I don't even want to be a part of it. So, that's just my thoughts with Peloton. Costco, I don't even know why I said it like that. Costco. Costco, guys, ticker symbol COST. This one's currently down about $100 a share from the recent all-time highs. In other words, it is down about 18, actually more like 16% from that point. So it's almost in bear market territory. And if I pull up this 3-year chart, actually, it's the 1-year chart that I want to look at. We're approaching a key moving average here, the 180 SMA on the 1-year chart, whether it be 460, 480, roughly that 20-point window. That's where I believe buyers could start stepping in. Maybe we get some sort of relief rally in Costco. So watch out for this one as it is getting near bear market territory. And like I say, guys, when these blue chip stocks go into bear market territory, they get picked up. I'm telling you, they get picked up unless there's an overall massive stock market crash. Then they'll probably go lower. And then again, if they did go lower, they just get picked up even more. So ultimately, I think Costco's looking pretty good here overall if you do have some time on your hands. And when it comes to the next one here, Starbucks, this one's also been taking a beating. I don't think this has had, maybe it's had 1 or 2 green days, but this whole month of January, I feel like it's been red day after red day after red day. This stock has gone down from $117 to $95 throughout this month. It is down 20%, pretty much in a bear market. And if you look at the 3-year chart on Starbucks, this pullback was much needed. We got very overheated, overbought, overvalued, whatever you want to call it. And now Starbucks is going right back to that 180 SMA, about $90, $88 here on this 3-year chart, where I do believe buyers will be stepping in anywhere from $85, $90 per share. Heck, maybe even here at $95 per share on Starbucks. So keep your eyes on that one, ticker symbol SBUX. And the next one here is Microsoft. We're seeing a nice ascending triangle on Microsoft. You guys can see, obviously, like all the big tech names for the most part, this has been uptrending for months, and we have a clear top at about 345, 350. That's been resistance for a couple of months, and we've obviously been uptrending into that resistance. So if I'm looking at this chart, we're still under the moving averages on the 4-hour time frame here, but if we start getting out of, let's say, 315, 310, 315, this could end up being a nice breakout play, probably back up to the 330, 340 range, back towards the top of the ascending triangle. And at that point in time, if the ascending triangle plays out, we're going to see a nice breakout, which Microsoft, being a big tech name, blue chip stock, who the heck knows? If the Fed turns around on their plans, if things get worse in terms of the economy and they stop the tapering, they stop doing whatever they're doing, with the interest rates or the rate hikes coming up, let's say they start pushing that back. I don't know. I mean, I'm talking hypothetically here, but let's say overall, if the markets continue going up, let's just put it that way. Let's not try and guess what's going to happen, but let's say overall direction's up. Microsoft's probably going to start breaking out again. I mean, that's just the truth when everything starts recovering, if that happens here in the short term. So keep your eyes on it. Also, watch out for Marriott, ticker symbol MAR. This one went up almost 2% today in the middle of a massive red day and a lot of volatility. And I'm personally seeing an ascending triangle on Marriott here. Same thing with Microsoft. So if we end up taking out, let's say Marriott breaks out of 100, maybe 160, $162 per share, and right by that 50 moving average on this 4-hour chart, I think this could start breaking out back 170, 175, no problem. So I'm going to put my alert mark is at or above $162 per share. That's Marriott, ticker symbol MAR. And I'm also looking at Pfizer, PFE. Pfizer has been selling off for a good month at this point, from $61 down to about 53. The stock is down about 13%, so it's officially in correction territory. And you guys can also see it is trading in a wedge, lower highs, higher lows, and we're under the moving averages, admittedly, which isn't the best sign. But if we start taking out 55, 56, the top of the wedge here, this could probably go a lot higher. You know, it might start breaking out again. So I'm going to put my alert at 55.50 here. Let's do that. 55.50. We'll be watching this one over the next couple of days / weeks. And we also have one more. We have one more. You guys thought we were done? We're not done yet. We have one more, which is GLD. This tracks gold, guys. Essentially, GLD tracks the price of gold. That's it in layman's terms, right? And I personally, if I want to go and invest in gold, I much rather buy the metal itself. I mean, if you just invest in a gold ETF, in my opinion, that defeats the purpose. But with that being said, I would love to trade the gold ETF. You know, I would love to buy it and speculate on the short-term price of gold. That's how I would do it. I wouldn't buy physical gold and then sell it 2 months later to speculate on the price of gold. That's too much work. I'd rather just buy an ETF, which, again, that's what GLD is. It tracks the price of gold. So this, if you guys look on the 3-year time frame, this is gearing up for a breakout. And I've been vocal. I think gold, yes, it didn't have a great 2021, but I think it could pick up here. It could be an asset class that does well this year, being a commodity, being an inflation hedge, and it didn't really hedge much against inflation when we had a lot of inflation last year. But that doesn't mean, since it went down last year, it didn't do well last year, that doesn't mean it's going to do bad or do poorly again this year. You know, I think it's going to be the opposite. I think we're going to end up breaking out in terms of gold this year, and I think GLD could easily go 183 if it breaks the wedge here, maybe back up to 195. So I'm watching GLD very closely, and when it comes to the price of gold, to see how it correlates, you can see gold is also in a wedge. It's trying to break out, and I think there's a lot of steam, or headway rather, up to about 2,000 an ounce. I think that's where gold could be going. So what do you guys think? Drop me a comment down below. Make sure to smash that like button if you all found value, and don't forget to subscribe and join my Patreon if you all want all my buys, sells, call outs, morning update videos, more access to me throughout the day, plus more. And make sure to get your 5 stocks free from Moomoo. Those are each valued up to $3,500. Use my link down below. Deposit $100 with Moomoo, and we each get some free money. Who doesn't like free money? And that's it. I'll catch you guys in the next video. Thanks for watching. As always, keep crushing the markets. Stay safe out there. Peace out, guys.